Hi, welcome to the down market view for Tuesday the 9th of September 2014. Starting off with the 5-minute chart, you can see immediately from the charts that there were a few issues yesterday with the market. It wouldn't break the previous day's high, which is what we're seeing here. And of course, prior to this, we had a long trade which closed back above the BRN there of 17,100. So it was a good omen there that the signal was above the BRN, but unfortunately it didn't quite make it through the high to the next BRN, the big round number of 17,150. So struggling there for yesterday, and then the market's coming back and then offering a sell signal. So let me just mark this up for you. Let's get rid of the navigation markup. We had the buy signal there. No, we didn't. Let me put it on the right bar. Let's start with this bar. So there we see the market being filled. Price is trading through the entry price. We have got resistance to the left here as well, of course, which is something that I've mentioned on many occasions in the market view in the tutorial videos, is that you should have a look to the left, see what you've got before the market opens, and here we've got support here. So this is useful here. The market then trades higher here, then comes back for the support here. But of course, as we get back to the resistance to the left, the market then decides to pull back. We see prices pulling back and then trading back up towards the high, but failing to make it. So why is this so? Let me just leave the entry price on there. Just drag that out of the way, and I'm going to go to the fib retracement, and I'm going to go from the high down to the low here, where the market stopped and then turned around. And you can see, if I just remove the check mark there so that it doesn't disappear off the screen, the high to the low there, you can see the market stopping at the 76% retracement. I've just removed the entry price, haven't I? So let me just pop that back onto the chart. So you can see there the market, the 76% is a resistance as this market starts to move back towards the high, and there we see the natural thing for the market to move lower. We get a sell signal, and we just pop that in place there. And so the market then is switching from long to short, and we've got the entry price here for the long minus the entry price for the short there as the market moves lower down to the scalp. So as the market moves lower, it switches position. The buy becomes a sell. The market's taken out. That's a 21 pip loss instead of a 32. And then we managed to pull back 20 pips plus in this. If you go down to the low of the test, which I'll just draw in for you. Let me just remove the markup there into tools. The pip measurement there from the entry down to the low is 27 pips. So worst case scenario is coming out yesterday with 1 or 2 pips, or at least break even or just under there. Now the market went through, I'll just turn all of these off. The market went through the scalp area here, but then found support. I mean, we look to the left and we can see why we have this support again all the way through. So the market finding some support there. No surprise at all. We see the testing coming in. We see all of this volume as well. This is what's known as stopping volume, because you get a cluster of it. You see the market selling. The buying comes back in, trying to bring it back above the 17,100. The selling resumes, and they say, okay, if you want to sell, let's see how much selling's around. So they test the market. We see a lot more volume in the test bar than we do in the selling bar, and the range is narrower. So this is what's known as buying pressure test, because the market's absorbing the selling that's coming into the market. We then see the market starting to move back to the upside, followed by more selling, and then eventually it all disappears. We're back to the low. And one interesting thing here, when you get these type of test bars here, get a zero extension, draw it across the low, and if the market doesn't close below the low of this blue test bar, then the market's likely to move higher, and that's what you see there. As the market then resumes its move back towards the upside. I'm just going to remove all of these other fibs and things because I just want to draw this on the chart for you. If you then go back to this high, down to this low and draw it across, you'll see the market trading back up just before the close towards the 76% area there as well. This is a natural pattern that happens in the market, so again, no surprise really to see this. And I will be doing an in-depth video shortly on using this 76% retracement. It's going to be more of an advanced thing, but once you get used to it and how to apply it to the chart, you'll be amazed how the market trades to these areas, as we saw here, as the market failed to move higher and then of course moving sharply lower there. In the daily chart, we can see yesterday's range is very narrow. It's inside of Friday's range. This is the overnight Sunday. This little horizontal line here didn't really move a lot. Yesterday inside of Friday's range, and at the moment on the overnight market, price is moving slightly lower there. So again, what I'll be looking for pre-market open today is to see if the market will hold above 17,077. This is an interesting area. Otherwise, it's down to 17,011 now. And really, apart from, let's have a quick look at the news. What have we got? Manufacturing production out at 9:30. That's forecast to come out the same. Of course, it doesn't really matter because we're not trading the markets till 2:30. So, but it's just something to be aware. If you see some activity on the pre-market, then that's what it is. And then, of course, Carney speaking at 11:45 a.m. So watch out then as well. If you at your computer, then just watch the Dow's reaction to what he's got to say at that time. No doubt it will factor it in, and then the market will come back to where it started from before he actually spoke. They'll just use it as a way and a means of shaking out any overnight positions. So just watch out for that as well. Right, well, that's it for this morning. Hopefully we'll have a better day today. 2 trades yesterday, 1 winner, 1 loser. Net overall really break even. Worst case scenario there, as you see the market buying back at the support we had to the left. A quiet day anyway because we knew there was no economic news out, so it was a case of collecting the money as it was offered really yesterday, unless there was anything behind the scenes that was going to move the market any further. Probably the same case today as well, but like I say, pre-market, you've got Carney speaking this morning. Right, that's it from me. I will see you in tomorrow's down market view. Have a good day. As ever, thanks for your support. And until the next time, thanks for watching.